In the most basic definition I can think of right now, IPO or initial public offering is essentially the process of offering shares of a private company for the first time to the general public. And the reason why private companies might be interested in going public is oftentimes one of three things. One, to acquire additional capital for growth of the company while getting free advertisement. Two, private investors might want to liquidate their stake in the company, cash out. Or three, just in order to pay off debt by getting an interest-free loan from potential public investors. While an APO is essentially the same thing as an IPO. The only difference is that it would not be a private company going public, but a publicly listed company going back to the market for additional funds. Hence, APO, additional public offering. For example, let's say you have an apple company. It's been a year in business and it's been going great, but you want to buy more land to plant more trees and grow your business. So you go to the stock exchange and decide that you want to become a publicly listed company. After you did all the paperwork, the stock exchange started advertising your company to the public and your company started getting a lot of attention. Before you notice, all the shares you decided to sell to the public was sold off. Matter of fact, you were oversubscribed, which just simply means that, let's say you were offering 10 shares at $1 each, you should only receive $10 total, but you ended up getting a total of $12. Now you can, one of two things, you can either refund the $2 worth of applications back to the last set of persons who applied, or you can increase the amount of shares being offered from 10 to 12 in order to cover the extra applicants. Regardless of which path you choose, you would have gotten the cash you needed to expand your company. So you build a factory to start making apple juices and jams, in addition to continue selling your apples. At that point, you would have been an IPO. Now, 2 years later, and the business is still going good. However, you want to expand and you want to venture into other fruits like banana. So you can sell bananas or make banana chips or bread to sell. However, you cannot fund the venture with the current cash you have. So you go back to the stock market to raise additional funds. And this is where you would be issuing an APO, which is additional public offering. Understand that this was an oversimplification of the process. It was just to get you to understand the basics. So see you in the next video.